All right, so in this video, I'm going to be talking about how you can implement news into your trading, how you can trade news, right? But Mike, I always thought you say don't trade news, don't mess with it. I thought you always say that that's for degenerates, right? Well, the thing is, I don't recommend holding through news, okay? I don't recommend having a position on through news, but you can still utilize news, and it's actually a very helpful, like it is like news provides you with certain signatures. Okay, there's certain things you need to look for from news. So here's what you need to understand about high impact news. It's a key time where you will find manipulation in the marketplace. There's other times where manipulation occurs, but news is a key time for that as well. Okay. And what you need to understand now, this isn't always the case, but it's a case many times, is the first run that you see from news many times is a fake run. It'll move in the opposing direction of where it really wants to go for the sole intention of taking liquidity, creating opposing liquidity, and then it will go in the other direction, of course, right? So here's the deal, fellas. We're going to utilize, now this is something, of course, I got a futures chart up right here. You can utilize this in Forex as well. All right, you're a Forex trader. It's the same concept. Take it over into Forex, okay? I'm just using this because it was a really good example from Friday that we had on here with futures. But the same deal when you got high impact news with Forex, you're going to look for the same exact signatures that I'm teaching you right here. All right, nothing changes. It's just price is price. Same signatures. Don't give a damn about the market that you trade. Price is price, okay? So we're going to look at this ES here. So we had high impact news on Friday on this thing. That occurred at 8:30, okay? But what you'll see here is we had this big spike up. You see this right here, right at 8:30. Boom, that's high impact news, okay? So what happened here? Well, what you need to understand is this spiked up at 8:30 and it took out what? Well, it took out buy side liquidity. So look, we took out right here, which is Hive Day. I'm going to note this first. That's Hive Day buy side right there. And we took out this as well. We took out previous days buy side liquidity right here. You see that? Now this thing's overall bullish, okay? And my bias was bullish on Friday, of course. But that's a lot of liquidity. So the key thing whenever you're navigating news, of course, is you need to understand, well, where your key liquidity pools are at. You need to understand what market structure you're in, all that good stuff, right? So in this case, we've already identified our liquidity beforehand. Like we know where our liquidity pools are. We know Hive Day is a key liquidity pool. We know previous day's highs is a huge liquidity pool, massive liquidity pool right there, okay? And we understand, okay, this thing it's in a premium overall, right? And we have this opposing sell side down here as well, which is low of day, right? Right here. So here's the deal, fellas. I'm going to go to replay. So we're coming up on 8:30, and boom, and this thing just rockets up. Look, here's 8:30. This thing is going ballistic. This thing is going crazy. It just ramps up and it takes out Hive Day right there. It takes out previous day's highs right there. That's a lot. Let me say that again. That is a lot of liquidity that it's pushing up into. And first things first. The very first move, it ramps up and it takes that buy side. Okay. Now, here's what I also want you to do in these cases. Whenever you see this run from news, I want you to kind of put yourself inside the mind frame of open market participants that are in this thing, that are trailing their positions. Where's your next key level of support at, really? Like, where's your next major level? Like, it sticks out like a sore thumb. Well, we have the ultimate low right here, right? And of course, we have sell side right here as well, which you can see down below. But we understand down below, we have the sell side liquidity that's residing down below. And this thing is pushed up. It has pushed up and it's taken out Hive Day. It's taken out previous day's highs. And it's done that from news, okay? So here's how I implement news. After I get a big run like that up into a large liquidity pool like this. Now, not every place the same, but I need that liquidity to frame the play. I need that massive liquidity to be taken out right after the news, okay? And of course, you got to understand the market structure that you're operating within. You got to understand, okay, where you're in a premium, you're in a discount on the higher time frame. We're in a premium on the higher time frame, of course. And this thing comes up and it takes out this buy side here, and it ramps up and it runs it. So what do you think we're looking for now? And I've talked about this in my draw on liquidity video, all right? If you haven't watched that draw on liquidity video, I highly recommend you watch it. It's gonna teach you a lot. And it connects perfectly with this, okay? Heck, I'll leave a link to that in the video description, my video that I made on the draw on liquidity. You're gonna want to watch that, okay? Because it connects perfectly with this. Because here's the deal. After we take out that liquidity from news, we already understand news is a key time for manipulation runs. That's what you see right here. that push up is going to do a few things. It's going to take out this buy side up here. So there's resting liquidity above these highs. But at the same time, what do you think this push up is going to do? Well, the degenerates see this thing pushing up, and they're buying it. It's ramping up. They're chasing price. They're buying that breakout, and that's going to create sell side below beneath these lows. Why beneath these lows? That's support. I mean, where else are people? Where else is they going to keep their stop at? Where else are individual traders going to be keeping their stops at? They're going to keep it underneath support. Or, I mean, yeah, there's some that are just full complete degenerates, right? Don't keep a stop whatsoever. But traders keep stops underneath support. Underneath the support is liquidity. There's liquidity. It's that simple. It's that fucking simple. There's liquidity beneath these lows, and it's already taken out the buy side up here. So that liquidity's done with, and it did it from news. So news accelerated this thing higher to take out this buy side, but now it's done. So think of it like this has enough fuel now. Just think of it like it has enough fuel. All right. It has a liquidity, and everything price does revolves around liquidity. It takes this liquidity, it's looking for the next, okay? And we have this push up from news. It takes this liquidity. It creates this sell side down below on this push up, right? And now we see it rejected, but I want to see what next. The second that you get that bearish shift in market structure to the downside, you can then look for it to draw to the opposing sell side. Think of it like the tide has changed. All right, the trend has changed. The momentum has changed. It has a shift, okay? And it's already taken this liquidity up here. So since that liquidity is gone and that liquidity is done with, and you get a confirmed bearish shift, the tide has changed and it can now look for the opposing sell side below. All right, wait a second. I don't think we got it, G. I don't think we got that strong close. Yep, we do actually, right there. See that? So why is this a shift? Well, to the short-term low right here, lowest low in the middle, higher low on the right, higher low on the left. So we have a little swing low right there, short-term low right there. That was created after we purged that liquidity. And you see right here how it came down this candle and it closed beneath that and it created that fair value gap beneath that. That is what we call a shift in market structure, of course, right? Right there, that's a shift in market structure. So the second that you get that shift in market structure, again, like the tide has changed. It already has this liquidity up here, so it has no reason. It has no reason to move higher in the short term. And now it's going to want to do what? Now that it has that change in trend, it's going to want to seek opposing sell side below, because that's where stops are residing next. It doesn't need to go higher, guys. It's already taken this. Why would it need to go higher? It's already, that liquidity's gone. It's done with. In the short term, I'll say. Again, overall, the market structure is bullish. And then that's what I was saying a second ago, where you got to have understanding of market structure as well. And yes, I have videos on that too. But in the short term, it's going to need more liquidity before it can make that next trip up higher. Okay, it needs more fuel to the down. Like it needs this sell side before it can make any type of trip higher, because it needs that fuel to move higher. It can't do it right here because it already has that liquidity taken. Now it has the tide that's changed. It's a shift in market structure. It needs more fuel before it can move higher. So now that we got this change in trend, where is the draw going to be next? We look for opposing sell side down below. That is your draw. Okay, and you can see right here, it pulls up into a premium within this little lower time frame range. There you go. There's an opportunity to get in. So you can see right here, if you take this high, then there's no other imbalance up here. Now, if there was another imbalance up here, like say, for example, we had a bearish imbalance right here, then you wouldn't want to risk this high because it has a reason to move higher at that point. But in this case, it doesn't have any other imbalance up in this area. As you can see, this is the last final imbalance within this swing. So what does that mean? Well, that means that you can risk to high that swing. You can go above the fair value gap if you want, which is right here. Or, just to simplify, just take the absolute high of that little price swing that you see right there and look. See how it came up to a premium within that range right there? Above 50% equilibrium. That's where you get short. In a premium marketplace, above 50%, because it's now in an expensive marketplace. Again, there's no other imbalance up there. This is the final one. So really, if you're correct on this, if you're really correct, it really shouldn't move higher than this. Sure, there are cases where you're going to get caught in stop runs. This is just a part of trading. But if the structure, if you're correct on it, if you're correct that this is really, truly the shift, then you're good to go. Like you can risk based on that. So how do you, what about for profit target? Well, you could target, of course, if you like singles, if you like low-hanging objectives, you could just target the low of this impulse move, get like a simple 1-to-1, or you can get good risk reward and target the opposing sell side down below, of course. Either's valid. So it doesn't matter if you like low-hanging objectives. It don't matter if you like having bigger winners than losses. It's got something for everybody, right? Market structure liquidity's got something for everybody, all right? It just depends. You got to understand where you are in the bigger picture of things. So you can see it ends up selling off, and then we end up targeting the opposing sell side below. Boom. That was the case, fellas. So in conclusion here, that's how you use news, guys. Like news, understand this. Many times the first run that you see from news is a fake run. Not always. Sometimes, and sometimes it's a little bit delayed. What do I mean by that? So USD CAD's like a really good example of this. What I mean when I say sometimes it's a little bit delayed, because you can see like with that ES, sometimes it's like immediate. Like it's very shortly after you have that fake run that then you'll get your move lower. But sometimes it's a little bit more drawn out. What I mean by that, like, so here's the deal with Forex. So we got this push up right here on USD CAD right here. You see like this really big ramp up right here. This thing pushed up and it took out this bots of liquidity up here. But the thing is, you got to pay very close attention to price because as the saying goes, the devil is in the details, right? Meaning that you need to pay attention to the details here. So we could see this thing had like a really big push up right here. And that was from news. I want you to understand like this was from news right here. Okay. Or that push up, right? Because we got 830 right here. You see how that had like that really big push up right here. And this came up and took out this bots of liquidity up here. That was that first run from news. And I want you to notice how it did not have any type of move lower either. Like this thing immediately pushed up here and it took out this box of liquidity up here. That's higher time frame resistance that it's pushing up into. That is the first move higher here. And yeah, you could have got a little scalp right there as you can see, but from like the higher time frame perspective. And then we have another key detail down here that I was talking about. This isn't like, I know it kind of looks like when I'm making this video, you're going over all this in hindsight. All this was talked about with my mentees. We were talking about this in detail about how I figured this thing was going to sell off and take out these lows because I didn't trust like that this was going to be like that this was really going to hold up here. I figured it was going to take out these lows because yes, we got the news that sent this thing up higher to take out this buy side, but not just that wasn't the only thing. It was also, we had that low put in an Asian session right here. An Asian session isn't the time for that to happen. That's not the time for that low to be put in. Now, if it was a London, that's better. But the fact that this was an Asian session, that's not the time. There's that time element that we combine with market structure and liquidity, of course. And I have that time element being that happened in Asian session, that I understand that is probably going to get crushed here very soon. And then I combine it with the fact that I have news right here that sends it up to take out this buy side. When I combine both of those, I can come to the conclusion, stop run. Even with it having like this fair value gap right here, even with it actually close above that high right there, I can come to the conclusion, stop run, because there's that time element. All right, news, and of course, the fact that, where you have that low put in is that time element. Okay, that's very important too. Okay, so, and then you can see it sells off, right? Because we had all those signatures. That's what you see happen, fellas. That is that move from news, and then that was that fake run. And then you can see, guess what? You have a shift here a little bit later. And ends up selling off, right? Then you have another move from news right here. Look, you had some more news right here. It comes up. What does it do? Again, stop run. Runs the high, stop run, fades lower. Because at that time, you still have Asian session lows down below. It's still intact from the other day that never got taken. The low was put in an Asian session. That's not the time for that to happen. And then you have the news that sends it up higher. We understand news is a key time for fake runs that runs out this buy side. But that low is still intact. See what I'm getting at? It all connects. So it's the same signatures regardless if you trade futures, regardless if you trade Forex. It's the same exact signatures, okay? So I think that about wraps it up though. Hope you enjoyed, got immense value out of this video. If you did, leave a like, subscribe to the channel. I'll catch you later.